Hey,
Hello.
man, how's it going?
Hey man, what's going on?
Not too much, bro. Just looking at the markets. It's been kind of crazy today, so I haven't really been trading too much. How about you?
Well, I would say same, but I actually got blown out of my FTMO recently. Funny enough. Oh well, not funny, but unfunny enough. Um, but yeah, no, I mean it was when the market was actually looking crazy last week. There was some UK 100 trade I tried to hold, and it plummeted, and I didn't catch it in time. But
Oh man,
I think I
yeah.
removed the stop loss, and yeah, that's how that happened.
Oh man, horrible, horrible. Yeah, there
Yeah,
there
man.
was a. That's why last week I was being a little careful with, especially the indices trades. Like I did see the UK 100 trade that was called today by the London guys, and that thing dropped like crazy, just like US 30. I think it dropped how many pips? Like yeah, nearly like I think
Yeah.
1,300 pips, and then for US 30, it dropped even more. It dropped about, let's see, about like 10,000 pips. That's crazy for like during just one session.
Yeah.
Um, but it's normally like that, like on the New Year's, obviously, because the market was closed for a whole 4 days, I think. So like all the volatility and all the orders from like that previous time pretty much just flooded in when the market reopened, and it just caused like a bunch of like weird movements in the market. So I think for US 30 it might be coming back up, similar with UK 100 as well. But I mean, we'll have to wait and see. I would definitely be careful with your trades this week, also because it's NFP. So we're gonna have like a bunch of different volatility movements in the market from now until I guess the end of the week.
Yeah, makes sense. So let's see. In terms of questions, I don't got too many, but I want to know with the K2 strategy that you use on US 30. I know it's kind of applied for UK 100 too, but
Yeah.
I just want to ask more in depthly about US 30 because there are sometimes I know it's like you look for the buy signal, you wait till it opens, look for the buy signal, and then if the next candle is valid, then you go for it. But I know there are some times where that's also not the case, but we still do the trades. What's the difference between the two, if there is
Uh,
one?
for US 30 or for UK 100?
US 30.
Okay, cool. Yeah. So basically for US 30, like for the trade today, I mean, I wish we took this trade. I don't know if you saw the entry today. I just didn't take it because it was dropping so heavily. But if we did take the first entry, like we normally do, it
Yeah.
actually would have hit full TP right here. I just noticed that this afternoon. It
Right.
would have went straight to full TP with no drawdown at all. I wish we took it, but just because how the market was moving, I decided not to take it.
Makes sense.
Um, but yeah, back to your question. So you were mentioning if the first signal is invalid, right?
Right.
Okay, so if the first signal is invalid, let me see if I could find one where that actually happened so we can use that as an example. Basically, the way that we did it previously is we would ignore the trade. So I'm just going to skip this because this is valid. I'm just going to try to find one where it was invalid so that we could
Yeah.
actually look at it, with regard to your example. So let me go to 630 here. That's valid. So that would have been taken. Let's see, previous day, 630. Yeah. Do you know if there was a day where you saw one that was invalid that was possibly?
Uh, I wouldn't be able to give a
Oh
specific
yeah,
day.
yeah, definitely. That's fine. I'm gonna go and find one just so I can show you, because it'd
Right.
be easier if we have an example to actually look at. So not there. I know we had one like in the beginning of December. That might be actually easier for us to do. So I'm gonna go back to December 1st, and then I'm gonna go see if I can find it from there because I know we had one during earlier in the week.
Right.
Let's see. November 30th at 6:30 a.m. No, it's valid. December 1st. Let's see. No, it's valid too. December 2nd, valid. December 3rd, valid. Damn, they're all valid. I think there was like one, I think it was on the 7th. So let me just get to that date. Okay, 4th, valid. 6th, that was a weekend. 7th, I think this was the one here. Okay, so here we go. That's perfect. So for this right here, generally what we would do is we would normally skip it. So previously we would just skip it, but I'm not sure if you're familiar with the new strategy that I was introducing a couple of weeks ago. It's not necessarily a new strategy, but it's an addition to the original strategy. that just
Right.
provides more confirmation. So generally for this, using the original strategy, you would just skip the invalid signal, and then you would just, let me just go back here. You would skip this signal, and then you would take the next signal. That's how the normal strategy works.
Right.
However, for the new one, I haven't really gone into details on this, but me and the other guys that have been back testing the strategy are implementing this now. So basically, instead of ignoring this, we take advantage of like every signal, even though it's an invalid. So instead of
Mm,
ignoring it like we would do previously, what we would do is, since this is a sell signal, we're basically anticipating it to eventually come back down. So for like this
right.
situation right here, it is retraced up a little bit, but we're anticipating it to come back down at some point, to conform to the momentum swing downwards. So
Mm,
using the new addition, instead of entering when the candle closes, what we would do is we would enter a short position at the low of that specific candle. So we'd enter down here, we'd place like a sell stop, and then we would let it play out from here. So in this situation, if you were to run into that, we would let it run from this point, and then you can see that it was filled at this point. So at this point, it dropped down, it filled the order for our sell stop. So technically, we're in the trade at this point. So in this situation right here, we would hang on to it. And then as it moves forward, we would just hang on to it even further and then let it play out. And then eventually, it looks like it would have hit, let's see if it hits TP or anything. So let me keep moving this along. It's currently in profit. And then I think it ends up hitting, yeah, so it ends up hitting TP right there. So
right.
that's how it would be applied now. I guess like since the beginning of December or maybe the end of November, that's when we started implementing this. And this is how we would implement it now, using the new addition to the strategy. But originally we would ignore it. Because obviously it's a false signal and we're looking for the correct direction of momentum. But using
Right.
the new strategy, this is how we would apply it now. Do you kind of
Right.
get what I mean by this new way that we apply it?
Yeah, that makes sense.
Yeah,
Basically, you still is an addition to the old one where it's like you're still using that same momentum swing, but it's just sometimes on a longer position.
exactly.
Maybe.
So instead of ignoring the signal, because like we did a lot of back testing, meaning like some of the London group guys, because they're testing for UK 100 as well. I started to
Right.
realize patterns where, sometimes even though it's an invalid signal, it still generally pushes in that direction in some instances, especially during the New York session. This usually happens like on the open. If there's like some sort of manipulation in the market where price is like technically supposed to go down, but then it gets
Right.
spiked up at the very last second. I'm sure you've seen that before where you're like waiting for a signal and then all of a sudden it just spikes up in the opposite direction and you're like, dang, like I wanted to enter that, but
Exactly.
yeah, exactly. So that's what I started to notice with my back testing with regard to US 30. And this is
Right.
probably how we're going to start applying it moving forward. The reason for that is because sometimes you'll get an invalid signal and then you don't get a valid signal for like hours later. And then there's like a whole area where you could have made profit, but we were like, too scared to take that trade because it was an invalid signal. So I figured out a way to bypass that.
Right. Makes sense. Makes sense. All
Yeah.
right. Then let's see. Uh. Okay. This one is a bit more of a different question.
Mhm.
So, in terms of calls and signals, this goes between the UK or the UK 100 and the US 30.
Mhm.
How would you know if one like if you're trying to do a little bit like of a self diagnostic of like of the trade? How would you know if one trade was riskier than the other in terms of like the call for that day? Like let's say one call one day is a bit more safer than the others, but you can figure that out on your own, like while you're taking it. I guess if that makes any sense.
Yeah, no, definitely. So, one way that I would personally do it is, it's kind of subjective because you have to kind of follow the news and
Right.
understand how the fundamentals work. So for me personally, like we could have taken this sell right here if we really wanted to, or we could have taken this buy if we were just ignoring fundamentals. But
Right.
me personally, because I kind of know how to follow news. I'm not like the best at following news, but I understand how things affect the market. So
Right.
what I generally would do is I would go to like CNBC. Let me see if I can pull it up. Do you ever go on CNBC or anything like that?
I have a few times recently, or I have checked the news, like whenever that happens.
Yeah, so basically what I do is like when I'm looking for the trade or if I'm waiting for it, I'll pull up CNBC and I'll just find things that will like directly affect either the Dow or the UK 100. So depending on what you're trading. So say you're trading the UK 100 like during the London session, right? I would just pull up a
Right.
Forex Factory. I would go to news and then I think so. Let's see. Basically, I would follow this right here where it has the latest stories. And if there's
Right.
news regarding UK, like if it's anything in the UK, anything in Europe, anything basically like within any European country, if there's some
Right.
news there that's affecting it specifically, where like it'll say like, some place is going to shut down or something like of the where you would expect it to technically like, directly affect that specific asset, then I
Right.
would consider that something risky because even though you'll be looking for like a buy or something, that news can affect it like one way or another at random. Like there's no real way to predict news, but if there's some sort of news, some entity or some person or some group of people are going to interpret that news and they're going to post it on whatever website like CNBC, one of the bigger sites, and
Right.
people are going to start reacting to it. Like for the Dow, I'm not sure if you're familiar with like how they post articles kind of late. Like when they post articles on CNBC, the moves already happened. So like right here, it
Right.
shows like a huge drop. And then what happens is a lot of people will try to take, like they won't want to take this buy right here because CNBC is like reporting like these huge drops and stuff. But
Right.
um, in reality, this news is just delayed by a couple hours. So at that point, it's already
Right.
begun to go in the opposite direction. So I don't necessarily base my trades off news, but I use it as like a confirmation. Like if I'm taking a sell and it says to sell, then I would probably take it if it's
Right.
vice versa. If it's telling me that the market's bullish and I'm already like I've already identified that bullish move, then yeah, I would take that trade as well. So I mean, it's kind of iffy how you would interpret it because like generally there's
Right.
no one way to predict how it's going to move or how it's going to react to the news, but it's going to react in one way or another. So if there is news, then I would consider that risky. If there's no news, then I would consider that like normal, basically.
Okay. Okay.
Yeah.
Makes sense.
Yeah.
All right.
Another way of doing it is like identifying zones as well. That's something that I do as well. So like for example here, if we're taking this, this buy here, and we're basically just waiting for that support. I'm not sure if you attended the live session today, but during the live
Not
session, I
no.
was oh not today. Okay, yeah. So basically what I was doing during the live session is I was drawing like zones down here as price was continuing to drop, further and further down so that I could identify areas where I should probably enter a trade or hold off on entering a trade. So I would like draw some lower zones here. And then as we're waiting for price to come lower, this would identify as some sort of rejection point because price came down. And then from there, it pretty much showed that there was a pretty subtle rejection like around this area right here.
Right.
And then this would make it a less risky trade because, the way that indices normally work are they're usually bullish. They have to recover at some point. People try to buy the dip. So this right here would give me confirmation that price is likely to, bounce back up. If there was no
Right.
support down here, then it would be risky for you to take this buy because if you were just, watching this drop right here, but it hasn't really established a bottom at that point, then at
Right.
this point, this would be risky. But since we do have a support there, this would give you a more confidence with this specific move to move in this direction.
Okay.
Yeah,
Makes sense. Makes sense.
yeah.
All right. Let's see. Next question is how to know if a trade is more of a short or long position. For example, I know you know the term hold don't fold. It's
Oh
basically
yeah. Mhm.
that knowing when a position is going to be more long or if it's like okay, this is a great example. There was a US 30 call, I believe. It had to just be under a week ago where it was over the course of it was basically over the course of the day. I think it hit full TP either that night or the morning after. But during the day, it went into the negatives, and there were some people I know that ended up pulling out because they thought, oh, okay, well, this one didn't work out, but then it ended up hitting full TP if they just stayed in there the rest of that day. So how
Exactly.
do you know if it's gonna be short or long? Do you just go until it hits SL, or how does that
Uh,
exactly work?
yeah, I mean, for the most part, I usually anticipate price to correct to where we initially anticipated to move.
Right.
With regard to the daily entry, because usually, how price moves is it'll move in like waves. Like I'm sure you probably heard me talk about this before, where like basically in between each session, it'll move in waves. Where so from right here up until Asia session over here, it moves in ways where it basically has like two different impulses. So I have like one impulse down here and then an impulse up. So in this situation right here, if we have like a buy entry right here, and then
Right.
sometimes, in some situations, it'll just go sideways for a long time. But generally, it will continue back in that same direction during Asia session.
Right.
So usually you'll have the two impulses during New York session, and then during Asia session, it usually continues in that direction slightly, kind of like what happened with us, if we were holding that trade for a long time. And then during London session, that's usually where it ends up reversing or going the other direction. Because
Right.
usually during each session, the momentum's already been decided by the banks and institutions. They push price in whatever direction that they've already decided for the day, and then once it reaches uh, London session, it pretty much does the same thing that it does during US session since it's so volatile. So like it'll move up slightly, and then it'll go for a second impulse where it ends up coming down. So
Right.
that's why I anticipated. I know what you're talking about because we held on to that trade for a long time. A lot of people pulled out, but it ended up hitting
Yeah.
full TP eventually. I don't know if
Okay.
it was last week. Was it like last Thursday? I think.
Yeah, it was definitely around that time.
Yeah. So let me
I know it
just.
just happened within the week or within like the last 7 days or so.
Yeah, it was pretty recent. I think it was like on a Thursday. We took that trade and then let me see if I can pull up my calendar.
Yeah.
So I think that was on the 31st. Actually, I don't know if it was the 31st because that was like New Year's Eve. I don't think we traded on New Year's Eve.
Yeah, I'm not too sure.
Let me just pull it up here. I'll see if I can find it. But yeah, for the most part, if I take an entry, I pretty much hold it until I hit stop loss for the most part. And it's only because I actually understand how the market moves. I think this was a trade right here actually. So here we go right here. So we held on to this like for a long time. I
Yeah.
think I took a long position right here. And then yeah, exactly what you mentioned earlier. It kind of went into some drawdown slightly for like uh, pretty much the entire day, and then it
Yeah.
ended up going upwards. And this goes back to like what I was mentioning before, how it moves in impulses. So basically, price will have like one impulse, it'll go sideways, and then a second impulse, either where it reverses or it continues in that direction.
Right.
And that's pretty much why I anticipated that to happen for that move. I mean, it could have went either way because if you're looking at this from this situation, it as it starts to swing back down, it does make you anticipate that it's probably going to reverse on you.
Right.
But for me, with our win rate and our back test, if we do lose, it's like I just take that as a loss. But
Right.
in the situation right here, we were already in some drawdown, so I just was like, I'm just going to hang on to it. There's no point in me in pulling out at that point. But I can see why people pulled out because right here it dropped pretty heavily, and
Yeah.
then eventually, when you least expect it, it just ended up shooting straight to TP.
Yeah. Yeah, you see it like and then it happened like I was like, oh wow.
Yeah. Yeah, because what happens here is like this is what happens with a lot of traders that they get faked out. Like they start to second think their position and they think that they might have made a mistake. But for
Right.
me, I've done so much research and so much data on the specific strategy that I know it usually plays out. And if it doesn't play out, it just doesn't play out.
Right.
But I trust it so much where I just take it and I pretty much just let it run for the most part to full TP. So
Okay.
there's really no theory, like no real theory to like behind that process. It's more so just like trade psychology. If you're confident with your strategy, then you can just
Right.
let it run and you can trust it. If you're not confident with it, then you'll pull out early. And that's what happens with most traders. They use a strategy that's actually profitable, but they don't have enough experience applying it. They don't have enough data where they trust that it's actually, it'll play out. that they ended up like pulling out of the position too early. But for us, since we're so confident with the strategy, like me myself, I just pretty much let it run because at this point, once it's in drawdown, I'm like, well, it's going to lose anyway, so I might as well just let it run to full TP, um,
Right.
or stop loss. Because in that situation, I'll just take the loss and I'll move on to the next one.
Okay, then here's the part two to that question.
Hmm.
Then during the swap spread that happens during the day, how
Yeah.
do you know? It's like because then it gets a little wonky in terms of how low it goes. How do you know sometimes that I guess it's actually I guess it kind of goes with the same thing you just said about how to just trust that it'll go back up.
Mhm.
But doesn't sometimes swap spread just completely make it go the other direction?
Not necessarily, because for US 30, when you enter the swap trade, the market just shuts down. So
Mm,
I mean, it doesn't necessarily shut down, but it closes where you can't enter or exit trades. So it'll shut
right.
down for maybe, I know it closes about 1:30 my time, so it's about 1:30 until 4. So it goes on for like 2, 3, almost 3 hours. It's different from Forex where it only shuts down for about an hour. For
Right.
indices, it shuts down for about like 3 hours. So
Okay.
during that time, the market is usually it's just frozen, and it'll move every once in a while, like just a little bit, but not
Right.
really enough for it to really stop you out, because it doesn't move like 1,000 pips. It's probably gonna move like a couple hundred pips.
Right.
Um, and then even during those times, the market will open for a second, then it'll close, and the spread doesn't go all crazy like how it does with Forex. So
So then, oh, okay.
oh,
So
go ahead.
then with indices, oh wait, go ahead.
No, no, go ahead. Sorry, I was trying to listen to what you were saying.
Oh, okay. So then with indices, when it is the swap spread, do you still recommend taking off the stop loss then?
If you're close to the stop loss, then yeah, I do recommend it. If you're like
Right.
within 500 pips, I would recommend removing it,
All right.
because even if it passes that 500 pip loss, you're only going to like tack on a little more of a loss, right? So I
Mm,
would prefer to hang on to it and not get kicked out of the trade so that you can recover from it rather than leaving your stop loss on and just being overly careful. And that just goes back to risk management. That's why I always recommend to be well below your daily loss if you're doing FTMO. So like my daily
yeah.
loss for 100K is like 5,000. So my 15 lot, I'm only risking like 2,250. So if it does go below that stop loss even further, if I end up holding on to it until the swap spread, it doesn't necessarily get even anywhere close to the max daily drawdown.
Right.
Hmm.
Okay. So then that was actually great. That leads to my next question about how the lots and mini locks work. So whenever you end up posting about lots, I know that there are different lot sizes for FTMO. Like for example, like you just said, 15 for the US 30, and I know it's a little different for the UK 100, but 15 for FTMO. Basically, does that equal 1.0 for anything else?
So 15 on US 30 for FTMO would be equal to 1.5 for
Okay.
like normal US 30 brokers. Since they measure it at a mini lot, you just basically just move the decimal over. And so instead of a 15, you just put the decimal over by one, and then it becomes a 1.5 standard lot.
Okay. And so yeah, because I was always trying to calculate it whenever you said how much the trade ended up being. I was always confused. I was like, okay, wait, I know it's a different number. I'm just trying to figure it out. Thank you for
Yeah.
clearing that up.
Yeah, no, it's pretty easy. Like if you have a calculator up, like if you're taking like a 10 lot, that would just be a 1.0. You just
Right.
pretty much put a decimal in between the number, because a mini versus a standard is just over by one decimal. So like if you
Right.
wanted to do that, you just multiply that by 1,500 pips, and then you'd be risking, obviously $1,500. Vice versa for me, I'm applying a 1.5 or a 15 lot. You multiply it by 1,500, I'll be risking 2,250. So this is like what way below the max, because obviously if I was to,
Yeah.
subtract 5,000 by 2,250, I could literally go past the stop loss another 2,000 pips basically. And price is going to spike like 2,000 pips during the swap spread.
Right. Yeah. Makes sense. Makes sense.
Yeah,
All
definitely.
right. And then the last question would be how FTMO, because I know you talked about it briefly the other day, how
Mhm.
FTMO works if you did want more than one account at some point. Like, let's say you pass verification or you pass and you get an actual account and then you want to do another one. I don't know, is that allowed or how does that all work?
Yeah, you can do it as many accounts as you want. So you could even do accounts concurrently. I personally don't recommend it. When I do it staggered. So I'll do like one, I'll pass my 100K, and then I'll do another one once that's passed or once I'm like about to pass verification, so that I can focus on that specific account. Because the problem with a lot of people is they try to run like, 3 accounts all at once, and then they
Right.
lose track of it, and then they're like, oh, one account blows, and they're like, okay, whatever, I have another account, and then the other account blows, and it's like, you should have just waited, because the problem with doing it all together is that if you run into a bad trading week or a bad trading month or so, you're going to get screwed if they all get, kicked out,
Right.
rather than doing, staggered, where you'll have one funded and then you'll be done with the funded one, and then at that point you can start the other one. But it just really, it's up to you. But FTMO will let you have as many accounts as you want. um,
Awesome.
yeah, you just have to pay the fee. Or like what other people do is they'll do like 100K account, and then once they're done with that, instead of getting a refund for because they pay you back your
Right.
your
Deposit.
deposit fee, yeah. Instead of doing that, they would just give you another account. They'll give you option of just getting another 100K account, and that's what I did.
Right. Makes sense. Makes sense.
Yeah.
Awesome. Okay, that's great to know. I know this is slightly short, but that's all the questions I have for me.
Oh yeah.
I just want
Oh,
to, clean up, clarify a few things, and double check. But thank you so much. I appreciate your time.
yeah, definitely. Yeah. If you have any other questions, feel free to reach out. We could set up another session. I know this is a lot easier and faster than us typing up, because it takes
Yeah.
some time. But yeah, definitely. If you have any other questions, always feel free to reach out.
Right.
And we could set up another session. I'm pretty much free for the most part, unless there's like another session scheduled, but I can always make time.
All right. Well, thank you very much, man. I appreciate your time.
Definitely, no problem.
All right. Have a nice day.
All right, Ren, see ya.
All right. See you.